Welcome to the Rick Helps Real Estate Show, our live stream for today. I normally do these at 8:30 in the morning, but wasn't able to complete that today, but I thought I'd jump on anyway. And I hope everybody had a very Merry Christmas. I have a middle son that's very techie, and he bought me a Ryzen AMD 5700X processor for my machine. Now, when you have a techie son that gives you something like that for Christmas, you have to pretend you know what he's talking about. So when he goes, oh, it's an 8-core thick 16 thread, Dad, it's going to really make your machine hum. And all you do is go, But anyway, it's going to make a big difference, but I can't install it. So that ensures me that he's going to visit again. So I had a great time, spent a lot of time in the kitchen. It's amazing how much time I spent in the kitchen just to feed 2 boys. But anyway, I thought we'd kind of go over what we're seeing in the market. You know, Christmas week, it's deader than doornail. And now the talk is, well, what's going to happen in January? So are we seeing any movement of any consequence going on? And we can start right now with interest rates, and the answer is no. They're remaining pretty flat. They're 6.32. They're going up 0.4, down 0.10. They're just kind of staying level like everything else. Crawford report came out on the Christmas Eve and said active listing counts have been dropping fast despite the low demand. The coming soon counts have increased over the past week, and coming soon only reached like 323. They were running about 900. So that's kind of a non-event. It is showing that the Cromford Market Index has got a lot more homes showing green, a lot more towns, not homes, meaning more favorable for sellers, but still not great. Buckeyes down here at 49.9, 100 being considered a balanced market. And thank you very much. Happy holidays to you as well. And Jackie, yes, I had a fabulous Christmas. And Fountain Hill is still the highest one, the leader of the pack there at 160.8. We'll go over that here in just a couple seconds. Listings continued to decline. We're down below 2018 levels here, but we're nowhere near where we were 21 and 22. And even on my 7-day moving average, I'm showing this normal dip that we have for the holidays, but they're both hugging very close. It's the gap between new listings and homes under contract that drive prices down like they did out here. There's other things that drive prices down, but when you talk simply supply and demand, that has to change. And this will come back up a little bit and then plunge back down as we get into New Year's weekend. Getting out, looking at the index here, this gets interesting. If we look at overall markets, notice how it's climbing. Looks like it's kind of encouraging, but we're still below 100. So we're sitting here at 96. And we look at supply, and that's why. That's what's driving that. Supply keeps going down. We have 16,700 listings today, active listings, and it's going down. And nobody's going to list their house today. They might list it before New Year's, so we might see some slight improvement. But for the most part, everybody's avoiding the holidays. Demand is just kind of bouncing off the bottom here. The index has been 71, 71.2, 71. So it's, again, demand is just and we see that here in the annual appreciation based on monthly average price per square foot. Now, this thing's all over the map. See this blue line up on the top there? Well, that's because in 2021, prices shot through the roof. So let me remove these other years and show you what I mean. This is showing the monthly average price per square foot jumped up 39% versus, for the year from here to here. And then now we're down to flat 0.08. So all of the gains that were made in 2022, like being up 23% on average price per square foot, are gone. So is that going to continue? Well, that's the old $64,000 question from that game show. But what we're seeing here, again, and I've showed this several times, is asking prices, people are leaving them right there. They're contributing more towards closing costs, giving you some help to buy down your rate. But as a rule, they're flat. And we've seen this before back in other years, like 2018. But yeah, I haven't seen it come screeching to a halt like it has right now. And that's going to be something to watch. So, it could be said, well, there's no sense lowering our price now because nobody's out looking now because it's the holidays. So that's a pivot point in January and February. Will we see more listings? Number one. And will we see people make more adjustments to their asking price as we get into the first of the year? So that is going to be, I think, for me, the first indicators we look at. Coming soon listings, although the Cromford report says that it showed an increase. Again, it's a large percentage of a tiny number is still a tiny number. So that's what we're seeing. We're only up 300. So that's just human nature. There's nothing really anything to look at there. Now, Wells Fargo came out. I found this is interesting here. The headline again says Wells Fargo economist says housing downturn is still in the early innings. Okay. How bad is it going to get? This is prediction season. So they go, the housing correction still appears to be in the early innings, since San Francisco Bank's economists said in their 2023 outlook this month. The ongoing contraction in buyer demand means further drops are on the horizon. Okay, how far? Well, the national median existing single-family home price is expected to fall roughly 5%. That's not much. I think that's going to be a huge miss. I just showed you the last chart. We're not going to be, we're going to be only off 5%. That'd be a hell of a good year to only go down 5%. The recent downdraft in single-family building permits points to a sharp pullback in new construction in the near term. They have not, there's not a whole lot of new permits being issued. They're projecting total housing starts to reach 1.56 million and fall to 1.232 million in 2023. So still, the economists see the prospect that sideline home buyers could jump into the housing market, especially if rates start falling. Well, that's the key. Rates have to start falling, and I'm not seeing that yet. Do you think the majority of the coming soon listings are new builds? No, they don't list them as new builds. I think what it is, and I agree with Cromford where they go, there's probably people that are going to list in January, and the agent just listed it as a coming soon over the holidays so he can get that out there so that people can prepare to go see it in January. But new builds, as a rule, don't list anything as coming soon. Seeing some new builds starting at 309 in Phoenix coming soon. Do you think that's because of the costing of construction's gone down like lumber? I think that's had some impact, but not enough. Prices, when they come down, normally aren't reflected as fast as we'd like to see in any commodity, including food. The price of wheat, once the nonsense out there where the war is ends and we start getting more wheat again, I bet you don't see beer come down or bread. Once they price there, they stay there. It helps them with their what I think they're doing in new builds right now, they're getting some margin relief because their building costs are somewhat lower, actually probably quite a bit lower from the lumber that they're buying, but they also buy their lumber and hedge it in the commodities market. So how much they're saving is really hard to tell, but I would venture to guess that the money that they're saving in lumber, they're passing on in incentives like rate buydowns, because they're seeing some incredible rate buydowns. We got a contract just last week, and the rate is 4.99, 30-year fixed. So that's a pretty big deal. What I really am curious about is if we're going to see this turn up, our active listings here in January. Now, sometimes when they go up a little bit. You can see here we went up in 2019 and then started coming down as gone into the spring. But this one, the market started getting really hot. So it's hard to point historically at what's gone on the past 3 or 4 years and say, well, this will probably happen again, because this is unlike anything we've seen. Even comparing back to 2008, that was a complete financial meltdown of our credit markets. It wasn't a supply and demand issue. The credit markets caused a supply and demand issue. Right now, our banks are fine. Our financial system is stable. Our debt is exceedingly out of control. And that is probably what we're going to see in the mid to long term affecting rates. So it's going to be a long haul, possibly. Jackie, we have several new listings coming up, but I still think listings will stay low due to rate locks. I agree. I don't see a whole bunch of people moving. Their rate's too good. They're going to stay put. But how many listings will we get? I mean, we hit a peak back here in week 43 of almost 20,000 listings. You go back a few videos, and I think I'm probably going to recap 2022 when we do the live show on Friday, but you go back a few videos, and I was saying, if we see that we all of a sudden shoot up to 17,000 listings, I would put your house on the market, because it's not the number of listings, it's the velocity of new listings compared to the activity of buyers. And buyers are starting to come down. Listings are coming up. You better list now, because it looks like the party's going to be over. For buyers, sometimes in 2021, I was telling people, you might want to sit on your hands and wait this one out. But I wasn't saying that because I was seeing a crash coming, but I was saying that this bidding war where you have to let go of your inspection period and you got to shorten your closing and all this stuff, and you got to pay over asking price. We all knew that was going to go away, but some people really wanted a house. And I also look at people that bought at the peak of this market, and these articles coming out saying, 8% of these people that bought in 2022 are upside down. Yeah, well, don't feel sorry for them, because those same folks have got probably a lower payment than you have. And they're sitting on a payment that's $600 a month lower than what you can get for that same house today. That's why prices are coming down, but it's not helping the payment yet, because they bought these homes at $500,000 at 3%. That's free money. Now, let's say that house goes down to $400,000, but your rate's 6%. At $500,000 at 3%, those people are still ahead. So they can sit there and wait this out. I think, and I think that's what people are going to do, no matter how bad it gets, unless they have problems with employment. But even problems with employment, because their rate is so low and their payment is very reasonable, it's probably going to be much easier to rent that out, especially when you compare it to apartments and townhomes and everything where people rent. So the other unknown that I want to watch, and I don't think we're going to see anything materialize even a little bit until after Super Bowl, and that's Airbnbs. Now, you as an audience, when I surveyed you and said, do you own Airbnbs? What are your plans for next year? 37% of you said you're going to sell your Airbnb. That's a pretty significant number. Then it was evenly divided, and people said they're going to keep them or they're going to turn them into long-term rentals. And I think that could snowball. If our tourism industry starts to suffer, then you could see more Airbnbs get put on the market. And you could simply see Airbnbs put on the market from the simple economic matter of saturation. If there's too many of something, the price comes down, and we're starting to see that. The regulation doesn't scare me. Our regulations down here are pretty mild. You have to register them with the city. You got to pay a licensing fee, and you have to provide an emergency phone number. I was talking to some friends that own Airbnbs in Coeur d'Alene, Idaho. Do you know that their Airbnbs have to be inspected? And you have to have a certain number of fire extinguishers. You have to have a certain number of alarms. All of these safety features that you would see in a hotel, they're applying them to Airbnbs. And before you get your license, it has to be inspected. And then guess what? To renew your license, it has to be re-inspected. So that could take the wind out of the sails of some of these people that just aren't doing it right. And if we start seeing more and more of that, then we'll start seeing a relief. And those Airbnbs, for the most part, are very good entry-level homes. Now, the other thing to watch this year, particularly in January and February, is Open Door. I think they only moved maybe 150 homes this month. I could be off. They pulled out 180 of them. temporarily off market so they can paint them again and put them back on the market. We'll see. Maybe they'll fix them up, but if there isn't demand, good luck with that. They still have 1,100 homes to get off the market. Last time we had a Super Bowl here, real estate market from out of state folks picked up quite a bit. Yeah, I think that's going to depend on the general economy, though, Jackie. I think I'm not really a pessimist by nature, but there's a lot of economic news out there that has me very, very nervous. The first of which is debt. So you've got the central bank that wants to pull back on rates, and the market is fighting them. So you can see that even last week, central bank came up, went up 50 basis points. The market said, nope, rates went down. And so they're going to have a tug of war. One of them is going to win. Either the market's going to say, we don't think you can get away with these rate hikes, and we're going to continue buying bonds, or the central market's going to say, we have got to get inflation down. We're going to clamp down, and we're just going to have to say we don't care what happens to housing, the economy, because the only tool that they have to get consumption down is to hurt the economy, and it's ugly. So it's going to be either a soft landing where we muddle along, but I think we're beyond that. But I can't make a prediction on where we're going to be. All I can say is right now, looking at January, February, let's see, are we going to get more new listings? Are we going to have another rate hike? How does the bond market react? And that will kind of give you a feel for where our spring market is headed. ClickSpiffy says we're an all-time high of hardship loans and 401k withdrawals too. Yeah, that tells you something right there. 401k withdrawals are usually things that happen in the beginning of a recession, but isn't it puzzling though that unemployment is still as low as it is? So, boy, we're going to have a lot of fun on this channel tracking all this stuff. So I hope everybody comes back. I'm going to be back on again on Friday at 3 o'clock live. And I've got a few more videos coming out. If you're thinking of selling, I've got one coming out this week that kind of gives you some tips on what to do and how to get through the inspection period, which is the most stressful part of selling your home. I had one, the agent goes, my client, I know him. He won't ask for hardly anything, and it'll be a very quick inspection. This guy asked for absolutely everything. And by everything, I mean the cap on top of the block wall, fix that. One of the faucets need to be tightened. He had a list of 30 things, and they drug us out to day 10 on the inspection period. So whatever people tell you going in, they rarely do that. So we'll see what happens. Hope everybody again has a great holiday and have a happy new year. We've got big plans for next year on this channel. Can't wait to share them with you. Take care.